Welcome watching this video. I'm Alan. Today I would like to introduce Hong Kong tax system. Hong Kong tax system is simple and tax rate is low compared with other Asian countries. There are three direct taxes in Hong Kong. The first one is profits tax, that is corporate income tax. Second is salaries tax to individuals. Third is property tax chargeable on rental income from real estate. Hong Kong adopts territorial basis of taxation. That means only business profits, employment income, and property rental income arising in or derived from Hong Kong is taxable. Moreover, Hong Kong has no capital gains tax, no GST or VAT. Currently, Hong Kong has concluded more than 30 bilateral comprehensive tax treaties. Now let's talk about profits tax. The normal tax rate is 16.5% for limited companies and 15% for unincorporated business, such as partnership. From 1st April 2018, two-tier tax rate regime was introduced. Under this regime, eligible companies can reduce half of the tax rate for the first 2 million Hong Kong dollars assessable profit. That means 8.25% for limited companies and 7.5% for unincorporated business. Moreover, capital gains, dividend to shareholder, and profits sourced outside Hong Kong are tax exempted. On the other hand, in order to protect tax revenue, provisional tax may be charged based on the current year assessable profit. Tax filing. Hong Kong companies can freely choose their accounting year-end date. For companies having year-end date between April to November, the tax filing deadline is 2nd of May of the following year. December year-end date companies have their tax filing deadline on 15 August of the following year. Companies having accounting year-end date between January and March, tax filing deadline is 15th November of the same year. The first profit tax return is issued around 18 months after the date of incorporation, and the filing deadline is 3 months from the issuing date of the return. In order to complete the tax filing, the company should submit their tax computation report, audited financial statements, and profits tax return. Offshore income claim. As I mentioned before, Hong Kong adopts territorial basis of taxation. It applies to both residents and non-residents of Hong Kong. The source of profits depends on the fact. The companies can apply offshore income claim if it has no business operational office and staff in Hong Kong, and if its directors or staff shouldn't come to Hong Kong. Let's turn to the salaries tax. Salary tax is charged on all income arising in or derived from Hong Kong from any office, employment, or pension. Employees who have their work base during the year outside Hong Kong and who do not spend more than 60 days physically in Hong Kong will be exempted from salaries tax. The tax year is from 1st of April to 31st March of the following year. Salaries tax return is normally issued on the first working day of May, and the filing deadline is 1 month from the issuing day of the return. Employer also has reporting obligation for all its employees irrespective whether the service are rendered by the employee in or outside Hong Kong if the total income exceeds the reporting limit. Salary tax uses progressive tax rate system subject to the ceiling of 15% of net assessable income unless approved donations. Under progressive tax rate system, the first 200,000 Hong Kong dollars net chargeable income is under 4 tax rate bands with equal bandwidth. The tax rate is increased from 2% to 40%. The balance is subject to 17% tax rate. This is the end of this video. Thanks for watching. Bye bye.